a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about uranium and nuclear energy ETFs. And we know that the war in Ukraine has accelerated the transition to alternative, cleaner sources of energy, particularly in view of skyrocketing natural gas and coal prices and the need for reducing the dependence on Russia for fossil fuels. And several extreme weather events recently have also emphasized the need for transition to cleaner sources of energy, even though fossil fuels are going to be around for several decades. And uranium, which is used mainly in nuclear power plants, is one of the cleanest ways to produce electricity. And despite that, just 10% of the world's electricity production is nuclear as of now, so that there's a lot of scope to increase. And unlike solar and wind energy, nuclear energy is around the clock, so 24/7, more reliable than solar and wind. Now, because of the recent need for, switching to cleaner sources of energy, including nuclear energy, the U.S. and many other Western countries are now planning to extend. They are planning to run their existing reactors much beyond their original operating licenses. And Japan, where nuclear power accounted for almost 30% of electricity before Fukushima disaster, is also now considering reopening many nuclear plants. And all Western countries, they are also building next generation nuclear power plants, and there is also rising demand for nuclear power from India and China, because these countries are also trying to meet increasing electricity demand while addressing air pollution problems. Now, the recently enacted and the act which has been signed by President Biden, the Inflation Reduction Act, it is one of the biggest climate spending act. It includes $370 billion in tax credit and other spending on clean energy, including $30 billion in tax credit for supporting existing nuclear power plants. And so that provides for about $15 per megawatt hour tax credit for existing nuclear energy units. Now we'll take a look at three uranium and nuclear energy ETFs. So the first one that I'm highlighting is by Global X. It is pretty popular with 1.6 billion in assets, charges 69 basis points, and it holds uranium mining and nuclear component companies. Let's take a look at this ETF by going to the code page on Zacks.com. And you can read our research report articles, and using the link, you can go to Global X webpage, and this ETF is up more than 7% today, has a nice dividend yield too. Now, Global X has a lot of good research materials on their website, including on uranium. So I would certainly encourage you to read these materials if you're interested in this ETF. Now, looking at the top holdings, Cameco Corporation Sprott Physical Uranium ETF, which trades in Canada and provides physically backed exposure to uranium. That is also one of the top holdings. Then companies like NextGen Energy, Paladin Energy, Uranium Energy Corporation, these are the top holdings. a lot of international exposure because nuclear energy is the need for switching to nuclear energy is not only in the US, but it is a global need. So Canada, Australia, South Korea, Kazakhstan, these are the top countries in terms of exposure, rather small exposure to US companies. The second one is by Sprott Uranium Miners ETF, ticker symbol URNM. And as the name suggests, it holds companies in the uranium industry. 85 basis points, so slightly more expensive, and 838 million in assets, so smaller than Global X Fund. Again, you can go to the quote page on Zacks.com, and from there, the external homepage, you can read more about this ETF and look at the top holdings. So these are the top holdings. This also has Sprott Physical Uranium ETF, which is trading in Canada, and you will see many similar companies between the two. The Global X product is more diversified. It has 46 holdings, whereas the Sprott product has, I think, 30 plus 35 holdings, so slightly more concentrated exposure by Sprott product. The third one that I'm highlighting is quite small, in fact, just 50 million in assets, though it has been around for a long time. 60 basis points expense ratio. As the name suggests, it holds companies in the nuclear energy industry. Let's take a look at the ETF, what it holds, by using the link and going to the external web page, the VanEck web page for this ETF. So this shows you the methodology. At least 50% of revenues are from construction of nuclear power plants, production of electricity, etc., etc. And you can look at the top holdings too. So you will see slightly different holdings in this ETF, and this has a lot more exposure to the US, about 54% to US, and then Japan, Canada. These are the top countries in terms of exposure. Now, on the next slide, I have the comparative performance of these three ETFs versus the S&P 500 ETF, and you will see that you will get a lot of volatility if you decide to invest in these products. But all three ETFs have significantly outperformed the S&P 500 index. The Sprott product is the best performer. It is up almost 30% over the past year. And the Global X product is up a little less than 20%. The VanEck product is up about 5%, and S&P 500 index is down about 10% over the past year. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything, and we will see you next week.